All the bulls and bear markets are different always. They're never exactly the same. But yeah, I think we go up for, the bull run isn't finished yet.
Bitcoin, the world's largest virtual currency, briefly plunged below $33,000 on Monday to its lowest level since July. It's since recovered back above $36,000, but is still down almost 50% from a record high of nearly $69,000 in November. Cryptocurrency has been considered a volatile investment because the value spikes and dips rapidly. Bitcoin is clearly not immune from this. Bitcoin wasn't the only cryptocurrency to drop. Others such as Ethereum, Solana, and others fell off as well. As cryptocurrency investors reel from the sharp sell-off in Bitcoin and other digital currencies, some fear the worst is yet to come. Meanwhile, the entire crypto market has shed more than $1 trillion in value since Bitcoin's all-time high, as top tokens such as Ethereum and Solana follow the #1 digital currency to trade sharply lower. Ethereum has more than halved in value since reaching its peak in November, while Solana has suffered an even steeper decline, falling 65%. These drops are happening as the Federal Reserve hinted that there could be a rise in interest rates for 2022, according to the Wall Street Journal. Higher interest will impact investor decisions. As rates rise, holding volatile investments that produce little income becomes less attractive compared with government bonds. That's got some crypto investors talking about the possibility of a crypto winter, a phrase referring to major bear markets in the young digital currency market's history. The most recent such occurrence happened in late 2017 and early 2018, when Bitcoin crashed as much as 80% from all-time highs. However, PlanB, an anonymous cryptocurrency investor, financial analyst, and cryptocurrency advocate, was amassed a loyal and engaged following on Twitter and has popularized the stock-to-flow model that is widely cited throughout the Bitcoin community. Has stated that the Bitcoin bull run is not yet over in a recent podcast. In the podcast, PlanB stated that he sees 2022 as a bull year. Let's hear from the analyst himself.
All the bulls and bear markets are different always. They're never exactly the same. But yeah, I think we go up for, the bull run isn't finished yet. And I will go beyond the 100K level towards 200, 300. You know, in last bull markets, the Bitcoin price went up 2x or 3x or sometimes even more above the stock to flow levels. So yeah, we could see 300K Bitcoin. That would not surprise me. But after the next all-time high, fear will kick in and we will see lower Bitcoin price. And I guess that will lead to there will be a trigger that triggers that fear and that downward movement. And that could be a government thing. It's mostly a government thing. It could be anything. But yeah, but it could also be just a very short bear market this time. Only half a year or 1 year. It doesn't have to be multiple years. But yeah, it could be 2022 is a bull year. 2023 is a bear market. 2024 we'll stay in the bear market. And then 2025 will go up again. I wouldn't be surprised to see that happening like that. That's how I long term would see Bitcoin. It always goes up, and there's a lot of volatility above that 200-week moving average, which you should ignore. And it goes up. In the long term, it all goes up. But it already did that, right? Last 10 years, and I think next 10 years, yeah, could be like that. Not necessarily an acceleration of that 200-week moving average, which would be the case if there were a super cycle.
PlanB is not the only one that is still bullish on Bitcoin. Vijay Iyer, Vice President of Corporate Development and International at crypto exchange Luno, thinks the recent slump in crypto is more of a correction than a sustained downturn. Bitcoin has typically seen blow-off tops before diving 80% or more, he said. This refers to a chart pattern which shows a steep increase in price and trading volume followed by a sharp fall in price. Corrections for Bitcoin usually are in the 30 to 50% range, which is where we are currently, so still within normal correction territory, Iyer said. Looking ahead, he says a key level to watch for Bitcoin is $30,000. If it closes below that point in a week or more, that would definitely indicate high likelihood of a bear market, he said. A decline of around 80% from Bitcoin's recent peak would indicate a price of less than $15,000. Iyer doesn't think such a scenario is on the table. Still, investors are worried about the prospect of further regulatory crackdowns on the crypto industry. Recently, Russia's central bank proposed banning the use and mining of cryptocurrencies, mimicking a similar move from neighboring China. And the US government is reportedly preparing to release a strategy to regulate crypto as early as next month. While it has been rough for the past few weeks in the crypto market, It has also provided a rare opportunity for many people to jump in at a much lower price. Here at Savvy Finance, even though our portfolio has been massively hit with the recent crash, we have been buying the dip with all the spare money we can afford. We urge all our viewers to stay strong and never to sell off their crypto assets, especially at a loss. The market will definitely rebound. As we always like to say, we believe we will see a $1 million Bitcoin in the nearest future. So keep hodling and stay savvy.